It's 10:07 lah. Okay. Investment tax allowance is another type of incentive given to resident company in Malaysia, where investment tax allowance and pioneer status are two incentives which are mutually exclusive. It means that if the company applies for pioneer status, they cannot apply for ITA. They can only choose one. All right. So again, which investment incentive that the company should go for, it depends on the projection of the company. It depends on the nature of the company. Remember that in the pioneer status, I mentioned that companies should have a profitable business, all right, not only from the promoted activities, but also from the non-promoted products, all right, or non-promoted businesses, because in order for you to maximize your exempt income, you should have a profitable, you should have a positive chargeable income, and also the non-promoted business should not making losses. Yeah, so that is for pioneer status. But if the company is a highly capital intensive, so you see that if you have high capital expenditure, that means that you're going to claim a lot of capital allowance. So this will give you a lower statutory income. So that's why for those companies who are highly capitalized, all right, they invest a lot, they purchase a lot of capital expenditure, then most of these companies, the pioneer status is not the best option for them. All right, maybe investment tax allowance, or what we call ITA, is a better option. All right, and again, in this class, I'll be using my students' presentation, all right, as a guidance throughout the class. Okay. So again, similarly, right, for ITA, a company participate or intend to participate in promoted activity in Malaysia or in the production of promoted product may make an application for ITA. All right, it's available to manufacturing, agriculture, hotel, and tourism business. Similar, all right, the criteria is similar with the pioneer status. It's just that whether the company wants to go for pioneer or they want to go for ITA. Right. The tax treatment under ITA is that a company is given a 60% allowance, all right, on its qualifying capital expenditure such as factory, plant and machine or other equipment used for the approved project. So later we look at what do you mean by qualifying expenditure under ITA. All right, and then the expenditure must be incurred within 5 years from the date which first qualifying capital expenditure is incurred, and then a flat rate of 60% of the QE will be given as ITA. So later we'll look into the computation. So what is CapEx? CapEx here is in relation to manufacturing company. All right, the capital expenditure incurred on a factory or any plant and machinery used in Malaysia for the purpose of the promoted activity or promoted products. So remember that it's a factory or any plant and machinery. So remember that when you have your CapEx, you may incur on your office equipment, you may also have your passenger car, all right? So all these two items are not qualifying purpose, for not qualifying CapEx for the purpose of ITA. So you can only claim ITA on CapEx for factory and any plant and machinery used in Malaysia for the purpose of the promoted activity. Yeah. And then in relation to agriculture, it means that CapEx incurred in respect of clearing and preparation of land, planting of crops, provision of irrigation or drainage system, provision of plant and machinery, construction of access roads including bridges, construction of purchase or building or structural improvement on land or other structures. So if you look at A to F here under agriculture industry, these are the common CapEx incurred. And remember that you can also claim, remember that you must claim these under capital allowance, right? So under normal circumstances, you have adjusted income minus capital allowance. So if you're in the agriculture allowance, in agriculture business, then you claim whatever the CE incurred on these, and then you claim capital allowance, whether it's a 50%, 20% or 10%. Yeah. But at the same time, if the company is under ITA, then not only you can claim capital allowance, you can also claim ITA, investment tax allowance. So this is additional. That's what namanya incentive, yeah, that further reduce the chargeable income of the participating companies. All right. And then we have hotel business and tourist project, which is related to all the expenditure incurred, for example, clearing of land for purpose of a tourist project, planting of trees and plants, construction of road and other infrastructure, provision of plant machinery, provision of birds, animals, and other exhibits, and the provision of buildings. So this one is related to the hotel and tourist project, right? Because all these are the common capital expenditure incurred by the company, all right, in their business. All right, the non-qualifying capex is that capex incurred on building used as living accommodation. Right, remember that under, for example, if you're talking about agriculture allowance, you can claim living accommodation. Under industrial building allowance, you can claim living accommodation, right, as a capital allowance. But for income tax allowance, income tax, investment tax allowance, ITA, all right, living accommodation is a non-qualifying expenditure. For plant machine use or partly or wholly used for director or individual who is a member of management, admin, or clerical staff. So that's why if you have any machine used for office purpose, all right, for example, you have a fax machine, or you can have a motor vehicle for your director. So all these are non-qualifying for the purpose of ITA. All right. Incurred here is there is an absolute liability to pay, payable, or becoming payable. The liability must exist in order to be incurred. Tax planning, it will be crucial for the company to plan ahead and incur the CE as early as possible so that it would fall into the tax relief period in order to maximize its ITA claim. So remember, at the end of the day, you want to maximize your exempt income, you want to minimize your tax liability. All right, so in order for you under ITA, for you to claim or to maximize your exempt income is to incur as much of capex as possible during the 5 years period, because later you will see that the ITA, all right, can be carried forward indefinitely. All right, the plan here is not defined in the Act, all right, but the India Supreme Court says that capital asset acquired by the taxpayer, namely the technical know-how, right? So this is the definition lah, but it's okay as long as you understand what a plan is. Anything that is being used by the business, all right, for the production of their income. All right, mechanism of investment tax allowance. All right, so how does it work? So remember, if you're pioneer status, you have the 70% abated. All right, similarly under ITA, we also have that 70% abated. But this 70% is set off against 60% of qualifying expenditure. Remember the QE just now? On promoted activity or promoted product. And then the ITA can only be credited to an exempt income account if the ITA is set off against 70% of SI of the business of that company in respect of promoted activity or product. Okay, so later we are going to look into what do you mean by, we know already what is a qualifying expenditure for the purpose of ITA. Then 60% of whatever that you incurred, then that is your ITA for the year. All right, and this ITA will be set off against 70% of your SI. All right, so later we'll see that you are going to have two scenario where you have ITA at 70% of your SI. All right, so when you have ITA exceed 70% of your SI, then the excess will be carried forward to the subsequent year. Right, the unabsorbed ITA can be carried forward indefinitely even after the tax relief period. Right, and then okay, the amount credited to exempt income will be the 70% SI, and the remaining 30% will be taxed at the prevailing corporate tax rate. Okay, never mind. Okay, then you have the other scenario where your ITA below 70%. So I think that if I were to read this, you also blur. All right, nanti we look into that later. All right, similarly under ITA, you also have the exempt income account where you can actually declare a two-tier exempt dividend paid out of the exempt income account, right? And And then the claim of CE, which is the capital expenditure under ITA, will not affect the claim of your capital allowance under Schedule 3, and CA will be computed on the same QE. So remember just now, it's just an additional allowance given to you. You do have the capital allowance first in order to derive to your statutory income. And then from the statutory income, we are going to compute what is the ITA and how much actually goes into your exempt account. All right. So this is a scenario where you have ITA. So it's actually similar in your textbook. All right. So we have ITA, which is the qualifying expenditure incurred for promoted activity or promoted product. All right. And remember that the ITA, the investment tax allowance, is actually under Promotion of Investment Act 1986. All right. Where you say that you can claim 60% of your QE. But the capital allowance on the other side is your Income Tax Act 1967. So the one that we have always been referring to, your Income Tax Act. Yeah. And the rate for the CA is 10 to 40%, but for the ITA, the rate is 60%. Of course, you have to compute the adjusted income as over capital allowance. Then you have your statutory income. Yeah. Okay. So let's look. So the CA is used in order to arrive to your statutory income. And then when you have your ITA, all right, this amount, the 60% of the QE, they have to compute what is your QE, then what is the 60% of your QE, will be set off against 70% of your SI. Right? So SI katalah sini 100. So here is 70. Okay? Saya nak betulkan sikit. So let's say lah kat sini, boleh tak? Alright, I put 100 lah kat sini. Alright, so here is 70. Okay. What is B? So let's make this A is less than B. Satu A is less than B and the other one is A is more than B. Okay. So B here could be, let me say, 160. So later we look into that. Okay. So I'm just giving you the example here. Right. So you have the 70% SI against you minus 60% your QE, A minus B. I give you an example whereby you have A of 70,000 and B, we can have the first scenario, B is 100. So assuming that A is 70, B is 100 means that A is less than B. 70 is less than 100, right? So when A is less than B, then you are going to have extra. So 70 and then minus 100. So you're going to have extra 30,000 of your 60% QE. Do you get that? All right, 60% of your QE is 100. So 70 minus 100, you have extra of 30,000. So what happened to the 30,000 is what we call the unabsorbed ITA, will be carried forward to your future years. Yeah, you can carry forward to your future years. So you have 30,000 which is carried forward to the future years. And the amount that is the absorbed amount, which is the 70, right? Remember you have 100, but you only absorb 70 out of that 100. So that 70 or what we call the ITA. So the 60% QE is the ITA lah. Right? So the ITA that is absorbed or which is utilized actually goes into your exempt income account. Yeah, so that's how you decide how much is the amount that goes into your exempt income account. In another scenario, you can have A is more than B. For example, you have A is 70,000 and your B is only 60,000. So in this case, all right, as you have 70 minus 60 is 10. So 10, it means that out of the 70 statutory income, you can only absorb 60,000. So it means that you have the balance of 10,000 which is not absorbed by your ITA. So this unabsorbed, all right, the 10,000, the 70 minus 60, the 10,000 is what we call unabsorbed SI. All right. B, how much is credited into your exempt income, again, is always the amount which is utilized. Right, so you have 70 minus 60 ITA, so it means that you're going to utilize all your ITA, which is the 60,000. So that 60,000 goes into your exempt account. So in other words, how you decide on the exempt account, whatever amount utilized, whatever ITA utilized is the one that goes into your exempt account. All right. So what happened to the 10 which is unabsorbed SI tadi? So the 10% and unabsorbed SI will be taxed at the normal tax rate, right? It means that initially it was abated, but because it's not enough ITA to absorb the 70%, so the balance will be taxed at the normal tax rate, right? So remember that the statutory income 70% is abated, you all have the other 30%. So the 30% will be taxed at the normal tax rate. Now you have additional 10% which is not absorbed. Right, the 10,000 which is not absorbed will be added together with the 30% SI. So this will be taxed at the normal tax rate. All right. Are you clear about this? Okay. All right. All right. For tax planning, all right, because ITA is restricted to 60% of QE, and then this set off against 70% of SI, and the amount credited into the tax exempt account is low or nil if adjusted income is low. So if your adjusted income is low or you have high CA, means that your SI will be low. So when your SI is low, then it means that you are going to have a lower 70%. And then the good thing about having low SI is that under ITA, wherever you have a lot of ITA because you incur a lot of capex, so it means that your ITA will also be higher. When you have incur capex, means that your CA is higher, your ITA is also high. Yeah. So because CA is high, SI is low. So when your SI is low, your ITA may not be absorbed. So whatever is not absorbed, then the ITA can be carried forward indefinitely against your future years, even though your TRP has finished. Yeah. All right. So and on top of that, the exempt account, when you have exempt account, you can convert that into exempt dividend. Yeah. All right, let's look at the example in your textbook. Hold on, yeah. Let me see example textbook 25.10. Oh, we don't have 25.10. Okay, let's look at this example. Okay, can you see this? All right, this is where we actually I showed you just now the graphic. All right, where you have adjusted income or A and B lah. Yeah. All right. Let's look at example 25 from 7. Can you see this clearly? All right, for the textbook, I'm sorry to inform that we have yet to get any feedback from the publisher. I do not know why. They have not responded to my email, nor even my WhatsApp and messages. Yeah, I'm not sure what is actually happening. But if you still do not get your textbook, I will keep giving you a copy of these scanned chapters. Yeah. 25.7, we have Siu Sian Sdn Bhd submitted an application for incentive on 5th of January 2018, received approval for investment tax allowance of 60% on 1st of March 2018. Right, the relevant information for year end 30th September 2018 and 2019, you are given the qualifying capital expenditure, adjusted income from business of 900,000 and 1.8 million, capital allowance 500,000 and 600,000, and you are given interest income of 10,000 and 80,000. Compute the total income of Siu Sian Sdn Bhd and state the amount to be credited to the exempt income account. Right. So remember, you are now doing ITA. You are given the qualifying capex already. So why you need this information? Because you want to compute what is your 60% of your qualifying capex. for you to compute your ITA. Yeah. And then given adjusted income, capital allowance, then you have to compute your statutory income. So for example, for YA 2018, you have income of 900 minus capital allowance of 400. So your statutory income, 900 minus 500. So you have SI of 400. So 400 SI, you compute your 70% SI, which is 280, right? And how much is your investment tax allowance? Your capex is 1 million. So 60% of that is 600. Yeah. 600, it means that your SI is only 280, but you have 600 ITA. So similar to capital allowance, you want to see how much you are going to utilize your ITA. So from here, you have 600, but income is only 280, means that you're going to utilize 280. Yeah. So what happened to the balance of ITA, the unabsorbed ITA will be carried forward to the following year. Yeah. Carry forward to the following year. So next year, all right, don't forget that you still have the statutory income, the 30% of this. Yeah. The 30%, 400 times 30 is 120. 120, you have 30% SI plus your interest income. Then you have a total income of 130. So far, so good?
Yes.
Okay. Then the amount credited is always 280, which is actually the amount which is utilized. All right, the amount that goes into your exempt income. While in 2019, you have income of 1.8 minus CA of 600, statutory income is 1.2, then you compute 70% of 1.2. 70% is 840, and then you compute your ITA. In 2019, your capex is 600, so 600 times by 60% is 360. So the 360, 60% is the current year ITA, all right? And don't forget, you also have the unabsorbed ITA, which is from the previous year. The unabsorbed here now becomes the brought forward in the following year. So now how much is available? You have current year 360 plus the brought forward figure 320. So you have how much available is 680. So in this case, your statutory income is 840. But your available ITA is only 680. So you're going to utilize all your ITA. But because 840 is more than 680, it means that A is more than B. So it means that part of this 840 is not absorbed. How much is not absorbed? 840 minus 680, 160. All right, the 160 which is unabsorbed will be added together with the 30% of SI. So 160 plus 360, 520 now becomes your aggregate SI. Yeah. So in this case, you have the first scenario, you have 280 and the B is 600. So you have here where you have your B is 600, A is only 280. So when you have this, then you have unabsorbed ITA. The unabsorbed will be carried forward to next year. In the second year, all right, you have A is only, what was that? 600 times by 60, 360 plus you have 680. But your statutory income is a lot more. So in that case, you have balance 30%, which is not absorbed by the ITA, will be taxed at the normal tax rate. All right, so you have 160 plus the 30%. 520 is what we call aggregate SI. And then plus your interest income, now you have total income of 600. The total that goes into your ITA for 2019 is always the amount which is absorbed or utilized. In this case, is the 680. So in the first year, you have 280 in the exempt account, and then you have another 680 in the 2019. So total in the exempt account is 960,000. So far, so good?
Yes.
Okay. All right, with the withdrawal of ITA, all right, in order to sustain the claim of ITA, capex incurred on factory, plant, machine, or building has to be used in the use, all right, has to be used in the promoted activity for a period of 5 years, computing from the date of acquisition. failing which any disposal of factory plant machine within 5 years would result the ITA claim to be withdrawn. In other words, it says that if you stop using the machine, all right, whatever the plant and machinery, or you dispose of within the 5 years period, which is the TRP, the tax relief period, all right, then the ITA will be withdrawn. All right, prior to 2019, the ITA would be withdrawn if the disposal had taken place within a period of 2 years. But now it has been increased to 5 years. So it means that you have to use the asset, use the plant machinery for 5 years, or it cannot be disposed of. If you dispose any of the plant machinery within that 5 years without any commercial justification, then the ITA will be withdrawn. All right, so we also have the variation to normal rules where it says that we normally set off 60% of your QE against 70% of your SI. Yeah, so that's the general rule, or which is the normal rule. But we do have increased rates. For example, project of national and strategic importance, it said that the flat rate is 100% of your QE against 70% of your SI. Yeah, so 100% means that whatever capex that you incurred, 100% is given as ITA. Yeah, and then set off against 70% of SI. You may also have, for example, here, this one is 60% of QE for high-tech company or medical devices, 60% of the QE to be set off against 100% of your SI. So this one is different, whereby assuming that your SI is 100, then the total 100,000 will go into your abated. It's rather than 70% abated, but this one 100% of SI is abated to be set off against 60% of your QE, right? So these are the additional rate, all right? We have the variation to the rules. So contract research and development company. So we do have contract research and development company, the company that do R&D lah. Yeah, so it says that may qualify for ITA of 100% of the qualifying capex. Yeah, so this one is 100% of the capex incurred can be used to set off against your 70% SI. All right. However, all right, you have to understand that regard to these R&D activities, there are two types of R&D activities. One is what we call in-house. It means that you have a manufacturing company and the same company conduct research and development activities in the house. Yeah. But the other company is that where you have manufacturing company and then the R&D is actually outsourced, right? Contract it out to a research and development company. So the expenditure incurred in-house on R&D and the capex incurred or R&D outside, all right, it gives you different tax consequences. How is it different is that if you have an in-house, all right, the ITA available is only 50%, but if you do it outside, you outsource your R&D to another company, it could be a related company or it could be a third-party company. So the ITA rate is 100%, which is higher. And on top of that, the period given to this company R&D is 10 years. So normally TRP is 5 years, but they are given 10 years period. So that is a lot. Yeah. And then other than that, it's similar. Right. So it says that Section 29F3 of the PIA is the Promotion of Investment Act 1986. It seems to imply that in-house R&D is a business distinct from its manufacturing activities. Thus, ITA for in-house R&D could not be set off against the profit from manufacturing business. As research is a cost center, it would be a disincentive for companies to carry out in-house R&D. So in order to promote outsource or you contract out your R&D, that's why the government give 100%, yeah, ITA for those companies that outsource their research and development activities, right? And it gives you a summary, all right, of those promoted activity, promoted product with the rate and the statutory income, all right? For example, here you have 100% against 70%. 100% against 100%, 60% against 70%. So for example, if you look at here, companies utilizing oil palm biomass, all right, means that given 100% against 100%. So government really want to give a lot of incentive. So they don't actually have to pay tax because 100% of their SI is abated. But again, remember that you can still have to pay tax if your 100% SI is more than your qualifying expenditure of ITA. All right. So again, it depends on the situation, because if it's not absorbed, then it will be taxed at the normal tax rate. Okay. Alright, so this is part A is your pioneer status, part B is your investment tax allowance. So this one topic is tax incentive, kan? So part C, we have selected industries, means that what are the incentive given to companies. For example, under here we have small scale company, where if they go for pioneer status, the statutory income is always 100%. Yeah, statutory income is 100% if it is pioneer. If it's ITA, 60% against 100% of your SI. So that's how the incentive varies, because normally for this selected industry, a lot more incentive are given to them. Yeah. And then whether you want to go for pioneer status or investment allowance. So normally this one is the exam question in your final, where you are given a scenario. Then you have to compute under pioneer status, and then under ITA, then you have to see which one is better for the company. All right. Of course, at the end of the day, you want a higher exempt account and a lower tax liability or your chargeable income. Yeah. So if you have these two, then you have to say, okay, for this company, pioneer is better because higher exempt account and lower tax liability. But another company, they can have a better ITA because ITA provides them with a higher exempt income and a lower chargeable income. Okay, so these are the normal question where it says that Andrea Guns Remberhard was incorporated in June 2014, set up a factory in Johor Bahru to manufacture industrial chemicals, a promoted product. All right, so this one is in Johor, it's not in a promoted area. So the rate is normally 60 and 70%. The company applied for pioneer status on 15th of December 2014 and it was approved by the authority. Production day was certified on 1st January 2015. So in this case, they are already given the pioneer status. The company made out accounts on 31st December and thereafter to 31st December. And you are provided with 1, 2, 3, 4, 5, 2015 to 2019 years of assessment. And the additional information, you are provided expenditure incurred on land, factory building, plant and machinery. So remember, land is non-qualifying expenditure in the say that you do not actually claim allowance on the land because land always appreciate in value. Yeah. And then you also have factory building, which is incurred in 2015, and plant and machinery incurred in 2015, 2,800. In 2016, you incurred 800, and in 2017, you incurred another 600 plant and machinery, right? And then for 2018 and 2019, there's no capex incurred. All right. Other information provided is that you have income and loss, projected adjusted income or loss. So for 2015 and 2016, you have a loss, adjusted loss of 600 and 300. And 2017, you have 3,000, 3,005 and 3,000 adjusted income. The annual allowance rate for plant and machinery is 10%. Right, so in this case, normally plant and machinery is 14%, but the question tell you that use 10% as your annual allowance. So compute the company's exempt income and tax payable, if any, for the year YA 2015 to 2019. Assume the income tax rate is 25% for 2015 and 24% for 2016 onwards. Yeah, so part A, because company is already granted a pioneer status, so that's why part A asks you to compute the exempt income and tax payable under pioneer status. But when it comes to B, say that determine whether ITA will be a better tax incentive for the company. So you say that, okay, now you do, you are given pioneer status, but is that the best? Is it actually the best for you? So part B requires you to do ITA, all right, and see whether ITA would be a better tax incentive for the company. Support your answer with calculations. Okay, so in the example here, that provides you with a vertical. All right, they compute the CA vertically 2015, 2016, 2017, and then plant and machinery, they compute is something like that. All right, but I normally, all right, I have actually advised you many times that I want you to prepare in the horizontal form. Yeah, means that you have the column for your 2015, 16, 17, 18, and 19. Yeah, compute the capital allowance first and then plug in the information for, but this one is for pioneer status. What we are doing now is ITA, so I want to show you the computation for your investment tax allowance. But rather than having the vertical form, all right, let's do it on the horizontal form. Okay, let's look at this. Okay, example 25.8. All right, you are given that. So first, number one is that always compute your statutory income because you all start with your SI. Okay, so how do you know what is your statutory income? Of course, you have to compute your capital allowance. So if the question does not provide the capital allowance, then you have to compute the CA. So that's why I showed you that initially, all right, the CA must be correct in order for you to get the correct statutory income. Yeah. So the provided that 2015 you have capex incurred on factory building and plant machinery. Again, land is non-qualifying. That's why you do not claim any allowance on your land. So let's have a look at factory building. You have what 2015. All right, you have incurred 1,000. All right, 2015 you incurred 5,000. And remember, factory building, the IA is 10%, AA is 10%. So for 2015, you compute what is your IA. IA is 1,000 times by 10%. I assume it should be 100. All right, and then for 2015, you have the 3% annual allowance. So claim 30,000 on that. And that annual allowance you're going to claim for 2016 until 2019. So for each year, you're going to have 30, 30, 30, and 30. Right? Remember, this one you want to compute the capital allowance only. All right? And then for the plant machinery which you incurred in 2015, you have IA of 20%. And remember, AA is 10% because why you are provided with the rate here, 10%. So you have 10% IA, which is, I think that IA is 20%. So 560, AA is 10%, it should be 280, yeah? And the same 280, because it's 10%, you're going to claim that for the whole 5 years period. And then for the following year, in 2016, you have another incurred plant and machinery of 800. So in 2016, you're going to start claim for your 800, all right, initial allowance is 20%. So 800 times 20% is 160. 10% is 80. And then you're going to claim initial allowance for the following years as well. So the following years initial allowance is 80, 80, and 80. And then the 600 is actually incurred in 2017. So you only start claim in 2017. 600, 20% initial allowance. You have 120. And then the annual allowance you have 60, 60, and 60. Yeah, 10% annual allowance. So once you have computed the capital allowance, remember you want to compute what is the CA available for the years of assessment. So for example, for YA 2015, all right, these are the available CA, right? So we want to compute what is your CA for the respective years of assessment. So for example, for 2015, you have 970, 550 in 2016, and 2017, 570, 2018, 450, which is actually from here, right? So all these give you the total CA for the year. And then for 2019, you have 450. So far, so good. Are you following?
Yes, madam.
Okay, now, all right, now you do your statutory income. So once you have your capital allowance, now plug in the information. Right, so for you to do computation for statutory income, I always tell you in the previous class, always have 2 lines for your adjusted loss and adjusted income. And then minus your capital allowance. Capital allowance is made up of your brought forward for your current year, for your available, and how much you utilize, and how much you carry forward. From there, you get your statutory income. Okay. So if you have losses, remember that this question, the first 2 years having adjusted loss, and then only you have adjusted income. So when you have adjusted loss, then you put that into your adjusted loss line, yeah, respectively. So you have 600 loss here and 300 loss here. But for the following year, you have adjusted income. How much is your adjusted income? Right, plug in the information. Okay, 3,000, 3,005, and 3,000. Right, now looking at your capital allowance, right? Column B is your capital allowance. Is made up of your brought forward and current year. So where do you get the current year CA? Actually from the one that you have computed at the top, right? So whatever you have computed here, then you put that as your current. So you just copy lah the figure, right? So you only have that, you already have computed your CA for the current year. Then what you do now is that you plug in the amount, okay? And then, all right, for 2015, remember you have a loss here. It means your adjusted income is 0. Right, 0 there. So what happened is that for 2015, you don't have any brought forward figure for your CA, but current year you have 970. So available CA is 970. How much are you going to utilize your CA for 2015?
0.
0, because you have adjusted income of 0. So you don't use anything. So it means that the whole CA available, what you do, you are going to carry forward to the following year. So you have CA carry forward to the following year, how much?
970.
970. So that 970 becomes 970 in the following year brought forward. All right. So coming back to your statutory income, you have adjusted income is nil. Don't have any balancing charge, but you do have capital allowance. You do not utilize anything. So what would be your statutory income for 2015?
Nil.
Nil. Very good. All right. When you come to 970 in the following year, brought forward 970. Again, adjusted income is nil. All right. So whatever available, 1520 will not be used. All right. 0. You do not utilize any of your CA. So whatever CA you have, you are going to carry forward to next year. Okay. So next year, you have a brought forward figure. All right. Before that, again, similarly, statutory income for 2016 is nil because you have adjusted income nil. All right. Next year, what is your brought forward figure?
1520.
1520. That is your next year figure. So it means that how much is available? The total 1520 plus 570, which is the current year CA. So now available is 2090. How much your income? 3,000. Your CA is 2090. How much you're going to utilize your CA?
2090.
You're going to utilize 2090. So since you have utilized everything, do you have anything which is available to be carried forward?
No.
No, 0. So you don't have anything, but what is your statutory income? Your income is 3,000, but your CA is only 2090. Do you have any SI?
Yes.
How much your SI? The balance is 910. So that is your CSI for 2017. Then you move to 2018 where you have, what is this? Do you have any brought forward? 0, I think. So available is only 450. How much is your income? 3,005. It means that you're going to use all your capital allowance. So anything that is carried forward? No. What would be your SI? 3,005 minus 450, 3050. Yeah. And when you do your 2019, similarly, there's 0 that is brought forward. All right. Available is 450 also. And then how much you utilize? 450. Use everything. So there's nothing to be carried forward. But what would be your statutory income? 3,000 minus 450 means that you have a statutory income of
3050.
Again, what will be your SI?
2550.
2550. 3000 minus 450. You jangan buat silap macam tu. Right? Saja je nanti. Okay. Clear so far? Right. So now what you do next is that, remember you're doing ITA now, bukan Pioneer, yeah. Similar, you do have your 70% SI. Alright, so 70% SI means that whatever you have SI at the top here times by 70% je lah. So whatever you have here, you times by 70%. Boom, plug the information. Right? And then what? Now you have the what do you have? The ITA. So ITA now is what we call 60% of QE, which is what we call current ITA. So what is your QE? From the information, what is your QE? For 2015, what will be your qualifying expenditure?
3,800.
3,800. Yeah, even though you incurred for land, but land is a non-qualifying, so you only have 3,800 for 2015, 800 for 2016, and 600 for 2017. So that is your qualifying capital expenditure. So what I would do normally is that upon my CA punya column tadi, right, at the top tadi, I akan letak one line for your qualifying expenditure for 2015, 2016, 17. Alright, I will put that like that. Alright, from the information, I will plug in that. And then I will have to compute what is my 60% of my QE. Oh, I tak kira So tak apa, I boleh buat 60% of QE. I boleh buat macam tu. Right? So what I do is that whatever I have here, I times by 0.6. Right? So that will be my current QE. Right? So then I just tarik this thing. Alright, so I have, this is the current QE, which is this is what we call current ITA. So the current investment tax allowance for the year is 60% of your QE. So that amount actually goes here. Right, your current ITA is actually the 60% of your QE. Mana I punya? Okay, ada. Right, so it's the same 2280, 480 and 360. But 2018 and 19, there's zero capex here. That's why the current ITA is also zero. Okay, all right. So similar to capital allowance, I still want you to do a format where you have the ITA which is brought forward, and then how much is ITA available, which is the total of the current plus brought forward, and then how much you utilize, and then how much you carry forward, and how much actually goes into your exam account. So have these common format for your ITA, right? So let's look at, for 2015, do you have any ITA brought forward? No, because this is the first year that you have your ITA. So ITA available is the total current plus ITA brought forward. So you have 2280 available. Now you have to decide how much are you going to utilize your ITA. You have a zero abated income, but ITA available is 2280. So how much are you going to utilize your ITA? Income 70% abated is zero. So how much are you going to utilize your ITA? Zero. Right? Because you don't have anything to absorb. Alright? Because the 70% is zero. So whatever ITA that you have, which is 2280, will not be utilized lah. You nak guna untuk apa? Right? So what happens is that if you do not utilize, it means that whatever that you have will be carried forward to next year. Alright? So next year dia akan jadi brought forward. Right? It will be carried forward to next year. This is the ITA carried forward. Right, so it means that whenever you do not utilize your ITA, it means that nothing goes into your exam account, because the exam account will only be we only have exempt account when you utilize your ITA. Right? In other words, your exempt income is your ITA utilized. So if you zero ITA utilized during the year, then zero goes into your exempt income. Yeah. All right. So for the following year, all right, similarly, you have a zero abated income. But QA available is 480 plus the brought forward figure 2280, then total available is 2760. But how much are you going to utilize? Zero. Why? Because you don't have any income here. That's why zero is utilized. So whatever you have here will be carried forward again, and it will be brought forward in the following year. Yeah, 2760 becomes the opening balance of your ITA. Exempt income, again, whenever you don't have anything utilized from your ITA, exempt income is also zero. When it comes to 2017, now you have income already. Yeah, statutory income is 910, but the 70% is 637. So you have the current year 360, but the brought forward is 270. So then you have the total available ITA is 3120. But you have income 637. How much are you going to utilize? ITA available is 3120, but how much you're going to utilize depends on your income only. All right, you're only going to utilize out of 3120, you're going to utilize 637 only. So what happened to the balance? The balance of the ITA will be carried forward to the following year, and then you have the following year balance brought forward to 483. Okay. As I mentioned earlier, your exempt income is always the amount which is utilized from your ITA. So whatever utilized, it will be your exempt income account. Yeah. And the following year, you don't have any capex incurred. So that's why your 60% ITA is zero. You have brought forward figure, so that is your ITA, but income here is 2135, so means that the ITA is bigger, so utilize 2135 only, the balance you carry forward. And how much goes into your exempt income?
2135.
Yeah, whatever the line underutilized, that will be your exempt income account. Yeah, so you have 2135. And finally, all right, look at 2019 carefully. Yeah, your statutory income is 2550, but your 70% abated is 1785. You don't have any current ITA. Do you have any brought forward figure?
It's 11 o'clock.
How much you brought forward?
348.
348. Right, 348 is brought forward, means that available is 348. But your income here is 1785. But your ITA now is 348. So it means that the income is more than the ITA available. So you're going to utilize everything. Right? Is there any more to be carried forward? No. Because why? No more ITA available. So how much goes into your exempt income is 348, which is the amount of the amount utilized from your ITA. Okay, so now you have 348 in the exempt account. But careful, yeah, you look at here. In 2019, you have 1785, 70% income, but you can only absorb 348. It means that you have a balance. What would be the difference here? 1785 minus 348?
1437.
Hold on, yeah. Hello? Ya, sir. Siapa ni? Cepat sikit, saya tengah kelas. Go back, yeah, thank you. Yeah, okay. Okay. All right, 1785. So it means that you have a balance which is not utilized, which is not absorbed. So you have the statutory income which is not absorbed by your ITA. So this is what we call the unabsorbed SI. Yeah, from the 70% which is unabsorbed, how much do you have? You should have an unabsorbed of 1437. Do you get that? In the previous year, you don't have anything there because why? Everything is absorbed, or you don't have any income, which is that's why you can absorb, right? But in 2019, you do have 1437, which is not absorbed. So when it's not absorbed, means that the amount will be taxed at the normal tax rate. Yeah, it will be taxed at the normal tax rate. So what happened is that you're going to add this, the balance, the unabsorbed SI from the 70%. You're going to add that together with your 30% SI. Remember the 30% SI from the top, which is to be taxed at the normal tax rate. So you're going to put that together. So you have another line for your 30% SI. In this case, 0, 0, then you have 273, 915, and 765. So remember that this one is the unabsorbed, the 30% SI, and this one is the unabsorbed SI, right? And then in another question, you may also have non-promoted activities where you have to compute what is the statutory income from the non-promoted SI. So then you have to add together here if you have lah. In this case, you don't have anything information on that. So for that, all right, then you compute. Now you have three types of SI. One is the unabsorbed SI from the 70%. The other one is the 30% SI, and now you have the non-promoted SI. Remember in the pioneer status where you have business, promoted business, and non-promoted business. So the non-promoted SI has to be computed and plugged in here, right? So since you have three types of SI, then we have what we call aggregate statutory income. So aggregate statutory income is the total SI at the top, lah, right? So whatever from the three SI here is what we call aggregate statutory income. Is that clear? Okay, yeah. Right. So you have another line that we call aggregate SI that you have to total up those three types of SI here. All right. Then, right, the formula continues where we have normal after aggregate SI, you have the less unabsorbed loss brought forward, and then you may add other income from interest maybe, and then from your rental, then you compute what is your aggregate income. Right. After your aggregate income, of course, you have the less current year loss. And then you have your less approved donation, which is restricted to 10%. And then you also have zakat, for example, business zakat. And then only you get to your chargeable income. So the difference here under pioneer status, you have total income plus deemed total income 30%. So it means that the deemed total income, even though your total income is 0, you still be taxed on that 30%. But for investment tax allowance, the 30% is at the top. So it may be reduced, right? The 30% here, all right, or the aggregate SI here, which is the 30% plus the unabsorbed, may be reduced by the losses that you brought forward. All right, so this is the good thing about ITA because it can further reduce your chargeable income. Is that clear? Right. So in this question, for example, you don't have any other income given, right? And first year here, you have 0 ITA. I think that is 0 unabsorbed loss. All right, you don't have any interest or rental. So your aggregate income would be from aggregate SI minus your losses plus interest plus rental. So in this case, it's 0, right? Okay. Current year loss, right? Current year loss. For 2015, does the company has losses? Yes. Right. 2015, the company has a loss of 600,000. Right. So under pioneer status, the losses here, 600, will be set off against your pioneer income, the 70%. Right. You have to minus your pioneer loss. In this case, assuming this is a pioneer business, right? So pioneer loss, so means that that one is a 0 because you have statutory income is 0 as well. So under pioneer status, it works at the top. But under ITA, all right, the losses is at the bottom here. So in this case, how much loss do you have? 600. All right, how much loss that you have is 600. Would you put 600 there? Would you like to minus 600 there?
No.
Yes or no?
No,
Why?
because the aggregate statutory income is nil. And
Not the aggregate
the aggregate income.
The aggregate income is nil. So if your aggregate income is nil, but you have current year loss of 600, so what do you do with that 600?
carry forward
You carry forward to where?
to the next following year.
To next following year, and where does it appear?
After the statutory income.
Yeah, this
Eh,
year
sorry.
unabsorbed loss brought forward. So let's assume that you have 600 here. Right? Let's assume that you have 600 there. So you do not utilize 600 here, so you carry forward to next year, it becomes unabsorbed loss brought forward. So here becomes zero lah. You do not utilize anything. Yeah. Zero, no donation, no zakat, so means that your aggregate income is also zero. When you come to 2016, you have aggregate SI of zero. So 600 nak buat apa ni? Are you having that 600 there?
No.
But zero here. So what do you do with the losses here?
Carry forward
Carry forward ke mana? Where to? 2017,
2017.
so it should appear here minus 600. Okay, it should be there, minus 600. So bila you carry forward, this level dah sama level lah. Alright, you carry forward to next year, so it should be in 2017, loss brought forward from 2016. Actually, it's actually from 2015. So here it becomes zero lah. Right, because the 600 you carry forward to 2017. Aggregate income here is zero because you don't have anything. Current year loss, yeah, initially, okay. 2016, do you have any losses? Current year loss?
Yes.
How much?
300.
300. So you should have here minus 300. Betul? But minus 300 ke atas tu zero. So what you do here?
Carry forward.
You carry forward jadi kat sini. Kat sini dah ada 600.
Plus.
So what you do is that you minus another 300 lah. So you, kalau you plus dia jadi ni. So kena minus 300 minus 300 lagi. So you ada loss of 900 kat situ. Right? So bila you dah carry forward kat sini zero lah. Okay. So your chargeable income will also be zero. So next year, you tengok sini. Next year 2017, you have aggregate income of 273. How much loss you have? You have 900. Alright, minus 600 and then minus 300, you have the 900 losses. How much should you utilize there?
273.
You only utilize 273. So what happened to the balance?
Carry forward.
You carry forward to next year. So next year berapa tinggal?
627.
So how do you know? You have 600 in the first year loss. You plus another loss of 300 and then you use 273. So the loss available now is 627. So that's why you are going to put that loss in YA 2018. Nampak? Right, so this one is the tricky part. I like to have question where you have these losses, where you have to show me that you actually understand how to actually make use of the losses and how to compute the amount to be utilized. Okay, so aggregate income here 273 minus 273, of course now is zero lah, right? And then you don't have any current year loss there. So your chargeable income is zero also. Even though you do have aggregate of 273, but this one is absorbed by your unabsorbed losses. Yeah, and then chargeable income is zero. When it comes to 2018, all right, you have 915 and then you have 627. If people ask you where you get your 627, you show this simple computation. Initially, you have loss of 600 plus another 300, then you utilize 273, so the balance is 627. So this 627 is to be utilized against 915. What would be your chargeable income?
288.
Sorry, bukan chargeable income. What is your aggregate income? Aggregate income is 288. Any more loss? No, you don't have any losses there. So what would be your chargeable income is 288. Right, but when it comes to 2019, do you have any more losses here?
No.
No, zero dah, tak ada. Right, so means that your aggregate income would be 2202 and then there's no losses, there's no donation. So that will also be your chargeable income. Right, and the question asks for what? Under ITA, you also have to compute the exempt income account and the tax payable. So these are the two things that are required for you to compute tax payable and so then dia nak charge payable, dia nak tax payable. So compute a tax payable. So what would be the rate for tax payable for 25% for 2015, but we only have for this is 16%. So kira lah 288 darabkan dengan 24%. Mana datang 16 tadi? Ya, tak ada pun. Right. Now you 288 times by 24%, 2202 times by 24%. So that would be your income tax payable. Faham tak? So how much goes into your exempt account? Exempt account, mana exempt account tadi? You only have this 2017, 18 and 19. So you show me here only, it will be more than enough. Yeah. So what you do then? Okay, so this is your ITA lah. Alright, and then of course in the question they got to compare. Alright, whether support your answer, and that means that you have to show me which one is better, the pioneer status or the ITA. If you look at the answer here, right, answer here is the first part is the compute the capital allowance. Right, please don't do the vertical part because my answer will always be in the tabular form. So if you do it something which is different, then it takes time for me to mark your paper. All right, so this one is the pioneer status. Let's look at the ITA. What is the ITA? So we say that total claim factory building ITA is the ambil je terus. Factory building and plant machinery, they have 3120, but I don't do it like that. Right, they do it exempt income nil 637 2135 348. So ours is in this form. All right, exempt income 637 2135 and 348. So we got the same answer, but just that the presentation is different. Right, again, I always like my presentation as compared to the vertical form. What about the ITA utilized? You have ITA utilized 637, 2135 and 348. Do we get the same? ITA, mana ITA? ITA utilized 637, 2135 and 348. Tadi I buat apa? Tadi kira apa? This is sama je exempt income. Because exempt income is always the same figure. Alright, because it's the same. It's always the same. Taxable income for 2015, 2016, we have 2017 is where's the taxable income? Tax payable for 2017 is 69120. We have nil here and nil here. Nil to 69120 dengan 528428. We have tax payable of 00, 16912 and 528.48. Right, so mana 2017 dia? Oh, dia tak tulis nil. 2018 is 69. So 2017 is also nil lah because we have the losses. Right, so then, alright, once you have done with that, because when you want to compare, it's always that it's good that you have this summary. Alright, under pioneer status and under ITA. Alright, what I normally do, I don't do this year by year. What I do is that I just take the total for 5 years. So for example, I want to know what is my exempt income. I will just total up this figure. Alright, 3120, and then my tax liability, I will compare this, my tax liability for the 5 years period. Alright, and then I compare, ada satu line je. Alright, I have my exempt income and tax payable for under pioneer status and under ITA. So if you look at here, under pioneer status, you have exempt income total is 3.657, which is higher than 3120. So which one is better for exempt income? Pioneer or ITA? Alright, under pioneer status, you have exempt income of 3.657. Under ITA, you have 3.120. So my question is, which one is better?
Pioneer.
Pioneer, because for exempt income, we always want to have the higher value. But for the tax payable under Pioneer is 468, under ITA is 597. So which one is better?
Pioneer.
Pioneer also, alright? 597, okay, sama. So because of that, alright, you say that, okay, for this company, Pioneer is better because they have a higher exempt income and a lower tax liability, right? So you explain a bit lah. Pioneer is more like that, alright? Therefore, Pioneer status appear to be the preferred tax incentive. Alright, so that's how you conclude lah when you do the both computation, Pioneer and ITA. You must have to come to a conclusion which one is a better option for the company. Yeah. Again, I don't have to show the whole years because I can always take the totality only. Yeah. So I ambil total je kat situ. Right. And then this one is the total for the 3120. Betul lah. Right? Because we are doing the ITA. So the answer is so if you have to do, then you have to do Pioneer lah. Pioneer, you have to show the workings, and then because we are doing ITA now, so you can do the Pioneer as well lah. Yeah. So if you want to do the Pioneer, katalah you dah start dengan ITA, you don't have to start from the very beginning. You can start from statutory income 70% abated ni. Dia sama je. Alright, cuma the difference is that from 70% abated minus loss. Alright, because why is it Pioneer here is better? Because they don't have the other non-Pioneer business. And they don't have losses. Alright, they do have losses, but then, alright. So you can actually do under Pioneer status, alright, the same one. It's just that you can show lah, alright, the workings is the same, alright, the format is the same. So it's just that it's under Pioneer status. Alright, you get this different answer lah because you do have here losses lah, right? The losses. And then how much goes into your exempt account. Alright, so 11, 12, 19. So I think that that's all for today. Alright, I have covered your investment tax allowance. So what you have to do now is that you have to do all the tutorial question. Make sure that you do all the question that I've given you. And then we discuss that in the following class. Alright. If you have not done your Pioneer, make sure you do the Pioneer as well, and then followed by the ITA. Even though the question may not ask for the ITA, please do that. Alright.